Hello, this is the fifth task on the second FAPS exam, level 3. So 18 marks about interpreting financial statements using profitability ratios. So identify which two of the following are considered primary users of final accounts. So this comes from our conceptual framework, and the answer will be lenders and investors. So the others are stakeholders, they are interested, but it's investors and lenders who are the most interested. Investors because they want to see, should they invest in this company? Is it likely to increase the value of their capital? Lenders because they want to make sure that they're going to get repaid. Identify the accounting principle being described in each of the following definitions. Sales revenue should be recognised when goods and services have been supplied. Costs are incurred when goods and services have been received. Right, so in other words, we're matching the expense and the income to the correct period. So that would be an example from this list of the accruals concept. So just to sort of quickly run down and explain what all the others mean. So accruals concept, matching income and expense to the correct period. Business entity is about making sure you recognise the business is separate from personal expenditure. So an example of that was in the previous question where the mobile phone use that was personal had to be brought out of the accounts. Consistency just means doing things the same year on year, which enables comparison. Going concern means we're not concerned and that the entity, the business, is going to continue to trade for the foreseeable future. Materiality is about items in the accounts which are significant enough to influence the decisions of the users. And prudence is about erring on the side of caution, being careful. So an example of that would be valuing inventory at the lower of cost and net realizable value, or making an allowance for doubtful debts. Right, so first one we think is accruals. Financial statements are produced using the assumption that the entity will remain in business for the foreseeable future. Going concern. Transactions and valuation methods are treated the same way from year to year, period to period. Users of accounts can therefore make meaningful comparisons. I should have read this before I explained them all. Profits are not recognised until a sale has been completed. In addition, a cautious view is taken for future problems, blah, blah, blah. Anything about erring on the side of caution is going to be prudent. Identify whether each of the following statements about profitability ratios are true or false. The analysis of financial statements using ratios provides useful information when compared with previous performance or industry averages. Yeah, that's true. An organisation's management will never use financial ratios to assess its performance. Well, a bit of a trick question. An organisation's management generally doesn't use them because they've got access to the management accounts. But there's nothing stopping them using financial ratios on the management accounts. It doesn't say it's the financial statements. So false. Ratios based on historical data can always predict the future. Well, certainly not. You never know what's going to be around the corner. You are given the following information about an organisation. The statement of profit or loss shows the following figures. Sales, revenue, gross profit, profit loss for the year. The statement of financial position shows the following figures, right? So we've got some information. We just need to know our formulas here. So return on capital employed. So I always think of it as, right, what am I getting back for what I put in? So what you get back is the profit that the business makes, and what you've put in is your capital plus any extra that you've borrowed, like through a loan. So the formula is profit divided by capital plus non-current liabilities. Right, so let me do that bit first. So 17,600 plus 116,210. So that's 133,810. 133,810. Right, so 133,810. Right, so I've now done the profit or loss for the year, 79,350 divided by the figure that I've now forgotten, 133,810. And then times that by 100 for a percent, 2 decimal places gives us 59.30. Right, the net profit margin. So any margin is basically the item that it states. So if it was gross profit, it would be gross profit divided by sales. Net profit divided by sales. So the net profit is another word for we've just got the profit or loss for the year. So 79,350 divided by the sales figure, multiplied by 100 to turn it into a percentage, is 18.49. You have already calculated the selling expenses divided by revenue as 15.6%. So that means our selling expenses are 15.6% of our sales. The corresponding figure for last year was 13.2. So we're now spending a higher proportion on selling expenses than in the previous year. So the selling expenses revenue percentage shows, so it's got worse. We don't want to be spending a higher proportion. So a deterioration when compared to the previous year. Part D, identify what effect, if any, each of the following scenarios may have on the ratios stated. Right, scenario 1. Your company has managed to negotiate a lower price with a main supplier of your inventory. This has not affected the quality of goods received. Right, so if I've got a lower price, that means I'm going to have a higher profit. So I believe that the return on capital employed will improve or increase. What will happen to my cost of sales relative to my revenue? Well, I'm now going to be spending less on my cost of sales. My revenue will still be the same. So my cost of sales as a percentage of revenue will have decreased. Scenario 2. The wage rates of admin staff have risen in line with others in the industry. The amount, skills level of the labour has been unaffected. So we're paying more to our admin staff. Right, gross profit percentage. So gross profit percentage has got nothing to do with admin staff because gross profit percentage is my sales minus my cost of sales. My admin staff salaries comes below that line to work out my net profit. So I don't think there's going to be any impact on the gross profit percentage. The net profit percentage, however, so if we're paying more out to our admin staff, we're going to have reduced our profit relative to our sales. So that one will have decreased.